What is happening, everybody? It's your boy, Sean McLaughlin, Options Sean on Twitter X. Today is September 7th, 2023. This is the weekly All-Star Options Jam session where I review any action that has taken place in some of the trades we have on, whether it was a trade that we exited, a trade that we took a profit on, a trade that we adjusted. We review some updated stops for some of our existing positions and anything else that we need to talk about. But this is a review for All-Star Options subscribers. If you want to learn more about All-Star Options, you can shoot us an email to learn more, to get involved, to get live, or not live, but get actionable trades delivered to you a couple times, 2-3 times a week with detailed trade plans, all derived from All-Star Charts industry-leading technical analysis. All right. Sorry for the sales pitch. But before we get into any charts and stuff, we need to drop the old disclaimer, of course. Everything we discuss here is for educational purposes only. I'm showing you what I'm doing with my money, and I hope that you are learning something along the way. All right, so let's start off with a couple high-level charts. I like to start off these sessions talking about the S&P and the VIX. As you can see here, we've had a very strong rally this week. Does this rally mean anything? I don't know. I'm skeptical. I feel like we're still stuck in this range bounded by these two gray lines here. I think the S&P has a lot of work to do to prove to me whether we're going to break higher or break lower. My bets that I've been putting on, and you guys know this for the last 3 weeks now, maybe 4 weeks, we've been putting on a lot of delta neutral option credit spreads, betting on sideways slop, and those trades have been working, and we expect them to continue to work. Now, this has been a powerful rally this week, but is it just, chopping around inside this range? We'll find out. Time will tell. Volatility index spiked a little bit, especially yesterday. Yesterday, curiously, it was up in the early going. Actually, sorry, not yesterday. On Tuesday, the first trading day of the week. It's a weird week, right? We had a holiday on Monday. On Tuesday, the VIX was up surprisingly a large amount, considering that the market didn't move that much. But maybe the VIX, the people who are manipulating the VIX, maybe they knew something, because markets did get a little slippery yesterday. But anyway, VIX is kind of at the low end of the range, so nothing alarming or notable to speak of there. All right, so here's a couple trades that we exited this week. We needed to, actually we got out end of last week, right? Friday the 1st, because Friday was September 1st. And when the calendar turns to a new month, when we get to the first trading day of a new month, I like to review any open positions that I have on that have options expiring in that month, because at that point it's put up or shut up time, right? If the position is working, then it's time to get aggressive with trailing stops to protect whatever profit we have in the position, while still giving a little bit of room to go further. Or if we have an options position that's just, the options are out of the money, it's not working. At this point, theta decay is getting more rapid as the days get closer to expiration, and we're on the wrong side of that. So I want to exit trades. So these two trades here that we're going to talk about were exactly that. These are positions that we were out of the money on September 1st, and theta was our enemy, so we were getting out. So Ferguson PLC was the first one. These are September 165 calls that we bought back in end of June. You can see in here, well, on September 1st, our calls were out of the money. Ferg was trading around 160, I believe, at the time. The good news here, if there is any good news, is that we sold these calls for about $1.40. Still a loss, right? We paid $1.80 for them. You can see right here, but we got out for $1.40, so not that big of a loss, all things considered. Doesn't usually work that way, but hey, I'm happy about that. So we are out of Ferg as we are approaching expiration. Same story with Take Two Interactive, ticker symbol TTWO. We were in a bull call spread, September 145s and short the 165s. We got into this also late June-ish. And it was looking like it was going our way. Things were looking good, but the market had other ideas when we kind of peaked out this summer. Took Take Two with it. And on September 1st, we were out of the money. We got out of the spread for a loss. I think we got around $1.80 for it. Not a total loss. So I'm always happy when they're not total losses. Even though I size my positions like this with the expectation that if I lose, it's a very strong possibility that I'll lose 100% of my invested capital. And I size my position accordingly, right? So if I do lose 100%, it's no big deal. So anytime I lose less than 100%, feels like, I don't want to call it a win, but it feels all right. All right, so a new segment. This is new to longtime All-Star Options subscribers. We didn't usually do this, but now that we're putting this on YouTube and making this available to everybody, just thought this would be educational for everyone. Plus, more to the point, we're always learning here, myself included. I'm always trying to get better, and I'm always updating my process, always iterating, always trying to be better. And one thing, upon some careful review over recent months, is I said to myself, Sean, you know what? There's no reason to stick with the original stop loss that I put on when I put the trade on, especially in these trades that I put on that have, 3 to 6 months time frame, right? Trades that I'm in for 3 to 6 months. As the market has moved and if the positions are working, there's no reason why I can't adjust my stops in the direction of the trend to, reduce the potential for loss or even to lock in some gains. So I'm trying to make it a better practice now to be more thorough and more regular in updating my stops. And so we have a bunch of stops on existing positions that I'm going to run you through right now that we're updating. In future episodes, I don't expect to have so many charts because we'll only have 2 or 3 to update. But this is just kind of like we're catching up for a lot of trades that maybe should have had stops adjusted sooner. But here we go. First one up is TLT. Now this one is a similar to the previous 2 trades we talked about. This has September options. So we are now in the expiration month. But the difference between Take-Two, Ferg, and now this one is that this trade is working. We are sitting in profits in this one. This position is in the money. We are long a straddle. We bought the September 103 straddle. That means we bought the September 103 calls. We also bought the September 103 puts for a 625 debit back on June 21st. This is a direct delta neutral trade, but delta neutral meaning we make money if it moves in big ways, if it makes a big move in either direction. And I got to be honest, when we put this trade on back in late June, while we were delta neutral, we thought if this trade was going to work, we were going to make money on an upside breakout. Turns out it was a downside breakout that is playing out for us, and that's a common theme. We'll see that at another trade in a little bit. But this TLT straddle we are in, it's working for us. I've now updated my stop to now 96, which is the high of this big red candle right here. It's just above the high of that. And I'll keep adjusting my stop if and when TLT moves lower. I'm going to keep trailing a 3 to 5 day stop just above TLT to stick with the trend if there is more trend to go in our favor, but minimize any pullback if any comes. So right now, our stop's at 96 on this TLT straddle. All right, now I want to drop you guys a lesson here. This is a lesson on a trade that we put on back in May in Honda Motor Corp. All right, so here's the blog post here. And by the way, notice here at the top, this is 9/7 updated our stop. That's today. I updated our stop on this trade. I'm going to start adding these little updates to our blog posts. So if you're in a trade with us and you want to go back, if you're thinking about adjusting your stops or wondering if I adjusted my stop, you can always go back to the blog post in allstarcharts.com and find the blog post and see if I've updated my stop. I'll put a note right there at the top of the blog post. But anyway, I want to read this intro to this blog post for the blog post that introduced this trade back on May 15th. So I'm just going to read exactly what I wrote here for you. I'm filing today's trade under the category of hard trades, not because it's particularly hard to execute or because it's a complicated multi-legged spread. It won't require an excessive amount of margin to get positioned, nor is there any risk of unlimited losses. It's hard because people might look at the trading action of the past few days and think that it's gone too far and I should wait for a pullback. How many times have we heard that, right? And traders who think that way may be right. But here's the thing. Sometimes the best trades to get into are the best precisely because they are the hardest to pull the trigger on. And that's where our opportunity is. Those of us who fight through the conventional wisdom of average traders and get positioned ahead of the crowd will be lifted later on by those same traders who were waiting for a pullback. and put on an ever rising, and they will put an ever rising bid underneath our stock that fuels our future gains. Today's trade might be one of those setups. So that was my preamble to putting on this trade in Honda Motor Corp. And you can see right here, May 15th, this is when I got in. And just like I said in that blog post, it looked like a hard trade, right? We had a nice strong run here leading up to our entry on May 15th. And it looked like, ooh, man, I'm buying a top. This thing's ready for a pullback. Some people might have thought that way. But our analysis, the team's analysis here felt that no, there was more to go here in Honda Motor Corp. And of course, we could have been wrong. But look at how this trade played out after we got in. I mean, basically with a one little hiccup right here, we basically went straight up for a month. We've pulled back and we've chopped around, but now we're breaking out even higher in Honda Motor Corp. And this was a trade, again, that looked hard and it felt hard when I put it on. But according to our best practice, as was laid out in the blog post, there's more to that blog post. I just shared one snippet of it to you. But we sold half of our position on May 30th. This was part of our plan. We wanted to take half of our profits or take half of our position off at a double, taking all of our original risk capital out of the trade so that we could free ride on the rest, which is exactly what we're doing right now. Whatever we sell our remaining calls, by the way, we are in the October 30 calls, okay? So whatever we sell, the remaining position that we have on, whatever we sell that for, that's pure profit because we already took our original risk capital out of the trade on May 30th when we sold half. So I've updated my stop to 30, which is right where our option strike is. So if it rolls over and breaks below 30, we'll sell the calls for whatever we can get, and whatever we do get will be our profit in this campaign. But guys, I just wanted to reiterate, sometimes the best trades are the hardest trades. Doesn't mean all we should do is go out there and look for hard trades, but we shouldn't be afraid of them when we do see them. So that's my lesson for the week. So I just want to throw that out there. I thought this was notable. All right, the rest of these charts here, not the rest, but the next several charts here I'm going to show, these are all updated stops. I'm not going to go too into detail. But the Russell 2000 IWM, this is a trade we got into back on May 10th. This was a risk reversal. So when we put the trade on, we sold puts to finance the calls. And when we had an opportunity to sell half of our calls at a price that would afford me the ability to close down all my short puts, I did so. So I did that, I think it was right here during this run up here. We were able to sell half of our calls, close all of our short puts. So now all we have is half of our calls left, and we have a small net credit already built into the trade. So worst case scenario, we're walking away with profits. If these calls that were long, we are long the 190 calls in October. If these calls expire worthless, well, we still walk away with a little bit of a profit. Not the profit we were looking for, but a profit nonetheless. But anyway, 180 is the level we are now watching as a stop in our IWM risk reversal trade. Okay, next up is KB Homes. We are long the October 50 calls. We sold half. Similar story. We're going to see a lot of these here. We got in on on March 29th. 2 months later, exactly 2 months later, we sold half at a double. So we are free riding on the rest of this position. And our stop is currently at 48 bucks going forward. So keep an eye on that one. Caterpillar, same story. Not the same story, but very similar story. We're long the November 240 calls. Excuse me. Got into it on May 17th. We sold half on June 7th. We're now free riding on the rest. These are our November 240 calls. So our stop is now at 260. This is the level I'm watching. If CAT comes down and breaks 260, hey, there's still going to be a lot of juice left in those calls. Or not a lot of juice, but there's going to be a lot of intrinsic value in those calls because they're very in the money right now. So let's say, I mean, worst case scenario, if we get out when it hits 260, we're going to sell those calls for at least 20 bucks. That's pure profit, ladies and gentlemen, because we already took our risk capital out of this trade. So this CAT is a great trade. It's been one of our better trades of the year. And right now our stop is at 260. We hope it keeps going. We have until November. And I'm liking this setup. I think we can go higher. But right now our stop's at 260. Maybe when we talk again next week, if we've broken out to new highs, I'll probably move my stop up to just below this level here. What's that, 265, 270? Anyway, CAT's been a winner for us. DraftKings, we're long the December 35 calls. We got into this on June 28th. It's not quite working for us yet, but I like how it reacted off this low here at 26, right around 26, and bounced and held, and now it's kind of resuming higher. We're going to use that as our stop loss level now going forward. Any close below 26, we will get out of DraftKings. Sorry, I seem to be getting a frog in my throat here. All right, next up, Carrier Global. This is another big winner for us. This is a trade we got into back on July 10th. We bought the December 55 calls. Now with this one, we sold half of our position on July 28th, but this was not a situation where we were selling half at a double. This was actually a profit target we were looking at, or a level, a key level we were looking at. If we got to 59, I wanted to sell half of my position for whatever I can get. All right. And I did that, and that locked in some profits. I don't have the number here in front of me, but we have several points of locked in profit on this trade, and we still have half of our position to go. We have until December. So December 55 calls. This trade also has potential to be a big winner. Like I said, we've already locked in some meaningful profits here, but we could have more to go. But right now our stop is 52. If we break 52, I'm going to pull the plug and get out of the rest of that trade. Next up, Palo Alto. This one gave us a scare, right? I mean, we got into this on June 2nd. This is a January 250 calls. And it was looking like it was going to go great for us. We never got an opportunity to sell any. And we were regretting that during this pullback. But it never closed below our stop loss level. So we are still in the trade. And we got rewarded for our patience. I believe this was an earnings gap here last month, and it looks like we're resuming higher again. But we're going to watch 210 as our stop loss level. Any close below 210 now in Palo Alto Networks is our trigger to get out. Next up is Schlumberger. So this is a trade I mentioned earlier. We have a long straddle on a TLT. Well, this is also a long straddle in SLB. We got into this trade way back on February 1st. Okay, February 1st. Now this is very interesting for us. We bought the January 55 straddle right here. We bought the straddle because options premiums were incredibly cheap, the cheapest they had been in a long time. So it was very affordable to buy options. We thought that Schlumberger was actually going to break higher. We thought it was setting up for a really nice breakout, and so we wanted to be positioned long. But we bought the puts just because it was cheap. It was a cheap hedge. Like I said, the premiums were so cheap at the time, and we were open to anything really. Well, we were bullish. It looked like we were going to get rewarded on the bearish side. We had a great sell-off here. The position was looking great. And then we had a resumption down, made new lows in May and June. Schlumberger was looking great on the short side. But then lo and behold, and it never triggered our stop, by the way. We paid $16 for this straddle, and my stop was if the straddle was worth less than $8, that would be my signal to get out. That's still my stop, or one of my stops. But once we were down here at the lows, it decided to rip higher. It never, the spread never was valued less than $8 for the whole spread, so it hasn't hit my stop loss. But now it ripped higher and it's breaking out, and now it's going higher again, and we may in fact make money on the long side in this trade. What a wild ride. We were bullish here, then we were surprised to find out we might make money on the downside, but now we're looking like we might make money on the upside again. What a wild ride. Anyway, we are now watching the 56 level for our stop loss. Again, this is a January 55 straddle, so we're long the 55 calls and the 55 puts. We paid $16 for it, and we have a profit target. By the way, we're not being greedy with this trade. If we can sell it for 20, that's where I'm going to get out for a profit. Meanwhile, if we break 56, I'll cut the trade and move on. Okay, so that's all the updated trades, and that's mostly beneficial to subscribers of All Star Options. So if you have those trades on, or if you're following along or interested in those trades, that's where we are at with our stops. And again, if you want to learn more about All Star Options, if you want to get involved, please reach out to us. Shoot us an email, info@allstarcharts.com. We'll run you through the options for All Star Options. We'd love to have you in the community. We have a live chat room too, by the way, where people can chat with me and with other members of All Star Options throughout the day, talking about trades we have on, sharing ideas, asking questions, whatever. Or just shooting the breeze. We can do that. All right, so we only had one new trade since we last spoke. It's a holiday, right? We had Labor Day weekend. Didn't put a new trade on Friday. It felt weird. Just felt like we were forcing a trade on Friday. Monday, the market was closed. So we only put on one trade since we last spoke, and that is Philip Morris. This trade JC and I put on yesterday. We sold some premium here, delta neutral premium. If you want all the details for this trade, please find it on the blog, allstarcharts.com, in the members section. You'll find the trade we put on here in Philip Morris. So go looking for it if you need to. All right, everybody, that's all I got for you this week. This is a longer session than usual. I promise in future episodes we won't have that many stops to update. If we do have lots of stops to update, maybe that's a good thing. That means things are working, right? They're going our way. Anyway, if you have any questions, like I said before, I've dropped this email address a couple times, but info@allstarcharts.com. Shoot us an email. Love to hear from you, even if you just want to say hi. All right, everybody. Fall is here. It's the home stretch for 2023. I'm feeling like we're going to crush it. I'm excited. I hope you are too. Let's get after it. Enjoy your kickoff football weekend. If you're an NFL fan, I know I am. Me and JC are going to a game in LA this weekend, and then my Bills kick off on Monday night. I'm very excited. All right, everybody. Take care. Have a great rest of your trading week, and we'll talk again next week. Take care.